Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro and my username on the eToro platform is bees84. Thank you very much for listening to my video today, and as usual, please don't forget to hit that like button, subscribe to the channel, and that will be really appreciated. Thank you very much. So in today's video, I'm going to be giving a very Easter special, and I'm going to be talking about what happened in my portfolio last week, as well as talking about an overall summary of the wrap up from March as we just move into April now, and how we performed. And I'm going to be talking about as well how we performed for 2024 so far. So happy Easter to you. I hope you all had a really great time with all your family and your friends, and you ate lots of chocolate, and now you're feeling refreshed and ready to go. So I'm going to jump into the presentation now. So our portfolio performed really well last week, and I was really pleased overall with the results. Our portfolio outperformed, and it was up about 2.01% overall for the week. If we compare that to the other benchmarks, the Nasdaq was down slightly at about 0.3%, and the S&P was up just a little bit at about 0.4%, and Bitcoin was up about 1.1% overall for the week. China continued to have some struggles, mainly because of the slowing growth rate in China, and also some of the fallouts from the property market, which have really suffered in China over the last year or two. And we continue to see that aftermath. So that's had a little bit of a negative effect on our portfolio as we hold some Chinese stocks. Bitcoin has kind of been finding support around that 70,000 mark. The halving is just coming just in a couple of weeks as well, which will have a supply shock further on the market. And we're also seeing a lot of demand. Bitcoin has kind of been in this kind of range between the old all-time highs around the kind of 67, 68 mark to around 72, 73, where the new all-time highs kind of stand. And what we've seen is we've seen a little bit of a drop-off in terms of the GBTC. We're seeing more outflows over the last couple of days, which have had a little bit of a negative effect overall on the price. And what you tend to see is when things move just slightly in either direction, what you get is you get a lot of buildup of leverage in the system. You get a lot of overconfident people, especially towards new all-time highs. They're positioned with a lot of leverage. And when you see a slight move to the downside, what you do is see these cascading stop losses get set off, and people get liquidated, which has a negative and quite a steep effect on the price. So don't worry about that too much. It's only a short-term move. It's very normal to see volatility, especially in the Bitcoin market, and even in bull cycles. During the last bull cycle, we had about 6 to 8, 20% or more drops. So I think we're still kind of very early in the bull cycle, and it's not something I'm particularly worried about. One of the other things that I've done is I actually moved my Litecoin holdings. So my Litecoin holdings I've had in my portfolio since about 2017. In 2021, I actually closed those at a big profit. And what I did was then reopen the position, and I mainly did this just for my copiers because the percentage was much higher in the portfolio than the actual value, and I wanted to make sure that this kind of lined up with the copiers. So I kind of closed it and reopened it again there. But what I've decided is I'm really bullish on the new 𝘁cie token, which has been added to eToro just last week. I actually own it in my own personal portfolio, and I have really since launch. It's a project that I'm actually very bullish on overall in the 𝘁cie ecosystem. It's a pretty fast blockchain. They're building a lot. There's a lot of developers on the 𝘁cie blockchain. They're building everything from GameFi to DeFi and all other different areas of blockchain technology, which is really exciting. They're also building on the new program language called Move program language, which is gathering a lot of attention from developers. A lot of developers want to use the ecosystem, also backed by many venture capitalists, which is pretty good because it actually encourages the developers to build on their ecosystem because they get grants and other such stuff as well. So I'm actually expecting that this could perform really well in this bull market, and it's one of my top picks in my portfolio. And I've added a small position now, but I do plan to add to that position to become a fairly significant part of our portfolio, although Bitcoin and Ethereum will always be the number 1 and number 2 weighted crypto in our portfolio. So our portfolio for 2024 year to date has been extremely good, and we've been performing very well. Our portfolio is up about 22.33%, which is a really great result so far and something I'm very proud on. It built on the very strong gains that we also had in 2023. So a lot of copiers are starting to see the kind of fruits of their labor start to pay off. So thank you very much for that patience. And then we've also seen, if we compare that to the Nasdaq is up about 9.1%, which is still a pretty good showing. And the S&P 500 is up a little bit more at about 10.2%. Bitcoin has had a really great year so far. Again, had a great year last year as well, but it's up about 65.83%. So far for the year. And just to wrap up March, because we're just now heading into April, another great result, another double-digit profit return of 11.37% overall for the March as we continue to build those profits. And we're getting pretty close now to our portfolio all-time highs. We're probably 5 or 10% away from that. So results I'm very pleased with so far. Going to be going over the main news for last week, and I'll try to do this fairly briefly. As I said, most of the major indices did advance slightly, although it was kind of quite flat, but on a quarter basis, it was very strong gains overall for the quarter. We look at some sad news and that happened in the US last week. We saw the collapse of a bridge called the Francis Scott Key Bridge in Baltimore. What happened was a freighter ship hit the bridge, and it caused the bridge to collapse, which many people went missing, and they had to try to find people that had fallen into the water. It was all very devastating. So before I talk about the economic consequences, I just want to send my regards and my condolences to the people that were involved in that, and RIP to anybody that was lost. President Biden has pledged that there will be federal aid to reopen the port and that it will be rebuilt. There could be some slowdowns, though, in terms of things, because it was one of the nation's largest ports, primarily for shipping cars and truck shipments, etc. So there could be some negative effects overall on the US economy. But first and foremost, a real terrible situation that happened. On Tuesday, the Commerce Department reported that durable goods orders, they rose by 1.4% in February. That is somewhat more than was actually expected, although the part of the increase was due to a revision in January's steep decline from 6.2% to 6.9%. The UK's Office of National Statistics confirmed on Thursday that the country has entered a technical recession for the first time since 2020. The economy contracted about 0.3% in the final quarter of 2023. And that was following a 0.1% contraction the previous quarter. So officially in a recession in the UK, it's kind of slowing growth. but that isn't to be unexpected. And actually, that might speed up the decreasing of the interest rates, those interest rate cuts that are expected to be cut over the next couple of months in the UK. So they are planning to try to support the economy. Similar story in Germany. The Federal Statistics Office has reported sales are down about 1.9% in February, below consensus expectations, and the biggest drop in 17 months. So also Germany and many parts of Europe are struggling to get people to go to the retail stores, buy things, and help the economy. So sign of slowing growth as well in mainland Europe. China has been a very difficult situation actually for the last 2 or 3 years. Chinese stock declined again last week, mainly because of all the burden on the ailing property sector and the downturn in the property sector. However, there have been some good news. Their profits and industrial firms have surged by 10.2% in January to February period, and that is compared to a year ago. And that is just a 2.3% decline from 2023. So what we are starting to see is that the policy support from the government in China is really starting to help the economy in China. And we're also seeing an increase in overseas demand as the economy is pretty good in the US and many other developed countries at the moment. So hopefully this can kind of stimulate some business and some further growth in China. And this would be good for the Chinese stocks in our portfolio. So as we move on to the top 3 performing stocks for last week, the top performing stock for last week in our portfolio at number 1 was the Comstock Resources, and that was up about 12.77% overall for the week. Comstock Resources is a natural gas producer, and natural gas prices did pretty well last week, and that explains that rise. The second best performing stock in our portfolio was Bausch Health, and that was up about 10.42%. Bausch Health is a pharmaceutical and healthcare company, and they sell lots of different pharmaceutical drugs in a variety of different sectors. Also sell contact lenses and other such very popular products. So that's done pretty well, up 10.42% for the week. And the third best performing stock in our portfolio last week was Sinclair Inc., which was up about 9.62%, which really helped to drive our returns last week. So as we move on to our Death by Charts edition, as I step into the first chart, the chart to the left, and that is the economic projections of the Federal Reserve board members and the bank presidents. And really what this shows is that the Fed has continued to hold those interest rates steady, once again at the current range of 5.25% to 5.5%. And although this decision was not a surprise, it wasn't expected that they were going to cut rates this quickly. What was a surprise is that the fact that they continue to forecast just 3 cuts in 2024, despite raising their expectations for growth. So they're expecting a very solid expectations for growth in 2024. And there was a lot of people saying, well, they may increase the number of interest rate cuts to 4 or 5 possibly for the year. But I think they're being particularly conservative because they want to make sure that they've nipped the inflation in the bud and that we don't have kind of sticky inflation that goes on for a long time. We've also seen some increases in oil prices and energy prices again, so they might be a little bit cognizant of that as well. I think that interest rate cuts are going to come in this year, but they probably won't start for another couple of months until they are really sure that interest rates deserve to come down. So the second chart to the right I wanted to show you was the S&P 500 and the best performance through the first 57 trading days. If we compare that to history, the S&P was up about 9.7% for the first 57 trading days of 2024. And that is the 15th best start to a year, and that is going back to the records which first took place in 1928. So a very solid growth overall in the S&P 500, and as we will see now, it's a bit above expectations. So the charts that again I wanted to show you, the third chart to the left I wanted to show you is the S&P 500, and that is Wall Street's 2024 year-end price targets, and that is compared to what we are now. So these price targets were taken at the beginning of the year, and then that blue line in that chart shows the current levels as we are today so far for the year. So what you can see from that chart is the average strategist was forecasting a gain of less than 2% for the S&P 500 in 2024. And what we've actually seen is that the S&P 500 is up nearly 10%. And actually this already exceeds every year-end forecast already. And we are only just starting April. The only one it's not surpassing is one forecast, and actually we're not that far off from that forecast either. So either the strategists have got it wrong so far for the year, or the second half might not be as great as the first half of 2024. Time will tell, but the markets are performing particularly well. Fourth chart I wanted to show you to the right is the home buyer housing payments. And what you can see is that the affordability of housing in the US is actually becoming harder and harder. And we are actually at historic lows for the affordability of housing. And what you can see from that is that the monthly mortgage payment needed for the medium priced home in the US has increased 80% over the last 4 years, mainly because of those interest rate hikes, moving from $1,500 per month to $2,700 per month. As you can see, this is a big rise, very hard for people to be able to afford that. And what this really leads to is either two actions have to take place, because this can't continue because it's not sustainable, right? And what actually we're probably going to see is either lower interest rates, so we see an increased rate cuts that come in maybe slightly quicker than had been expected, and then affordability, things can be a little bit more affordable again in terms of mortgage payments, or alternatively the price of housing starts to lower. I think it's more likely that we see interest rate cuts this year, which will make things a little bit more affordable. I don't think house prices will go down in 2024, but we will see as time progresses. But it's becoming very hard for the average US consumer to be able to pay off their mortgage at these very high rates. Right, as we move on now to the crypto news and views, as I've mentioned, Bitcoin has had a really great year so far in 2024. And that was mainly to do with the new demand that was actually created in the market through these Bitcoin spot ETFs. It's one of the best launches in history, the fastest growing AUM in history in such a short period of time. Wall Street has really embraced Bitcoin, which actually surpassed a lot of the expectations, even from BlackRock and Fidelity, who are already extremely bullish on this asset class. And what we're actually seeing now is we are starting to see that it takes a little bit of time for a lot of the major companies and the major asset houses to be able to buy the Bitcoin spot ETFs, because they had a lot of internal approvals to have before it's actually launched. So we're starting to see those come online, and we're expecting to see more of those come online in the next couple of weeks, which should increase the amount of inflows into Bitcoin, and we'll start to see financial advisors actually advise people to put some of the funds into Bitcoin, which is extremely positive for the asset classes. We've seen a little bit of an increase recently in the grayscale outflows, had a little bit of a pressure over on the price, but I do expect that to continue to go down over time as the kind of we see an increase in the new Bitcoin spot ETFs and a slight decrease in the market share of GBTC on the market. So it's kind of going to be a gradual process. Again, we have the halving that's coming up in just a couple of weeks, which is going to put a supply shock and a supply pressure on Bitcoin. Miners are going to be selling less Bitcoin into the market. And there's already a lack of Bitcoin on the markets, with over 80% of Bitcoin not moving in the last year. We also saw Coinbase last week for the first time have the lowest amount of Bitcoin that they actually have available on the exchange. So again, another supply shortage catalyst, which should be very good for the Bitcoin price in 2024. So I'm still very bullish. Don't worry about the volatility that will come along this way. A lot of you have held for quite a long time. Some of you are coming into the market now. I do expect it to go a lot higher, but there could be some fluctuations in the price. So don't worry so much about that. Ethereum spot ETF. There is an opening date of May for potential approval for the Ethereum ETF. I personally don't think it will get approved in May 2024. I think it's going to be later on in the year. There hasn't been a lot of movement from the SEC on the Bitcoin spot ETF. They haven't been inviting providers in to talk like they did just before the Bitcoin spot ETF approval. There's also a lot of pressure on the SEC not to approve them, mainly because of the raging success that Bitcoin spot ETFs have actually had. I think because the Ethereum case is quite similar to the Bitcoin case, I think if it has to be put through the courts, I think it's quite likely that the Ethereum spot ETF will be approved on similar grounds to Bitcoin, because there's already an Ethereum futures product in place. But I think it will come later in the year, potentially around November, December 2024. So we will see. 3 major pieces of news that happened last week in crypto is we finally saw Sam Bankman-Fried was sentenced to 25 years in jail. You all know the FTX story. It was one of the biggest exchanges during the last bull cycle. And what happened was FTX tried to bail out Alameda, which was a failing hedge fund that had got themselves into all sorts of trouble. They used customer funds to bail out Alameda. The public found out about this, and there was a run on FTX, which means everyone tried to withdraw their funds. They didn't have enough liquidity in there because they'd invested the money elsewhere, and this caused them to have to file for bankruptcy. And this kind of leads us to where we are at this point. Sam's been in jail for quite a long time, awaiting sentence, and finally he got 25 years in prison, which I actually think is quite fair, because I know a lot of people were harmed by his actions. A lot of people lost money, so he does deserve to get a pretty severe punishment. And I think 25 years is about right. He's still going to come out as quite an old man, and his life will be seriously affected. And I think this will be a real way of stopping people in this bull market and preventing people from doing similar risky actions to protect where we are, and more as a deterrent for what could happen in the future. So I think it's overall a good result, and I think justice has been served. Second thing that I wanted to talk about was the 𝗃𝗶𝗀𝗲 versus Craig Wright fake 𝗁𝗁cie court case that happened. It was ruled that Craig Wright was not Satoshi, Big shocker, not a big shocker. Everybody knew that he wasn't Satoshi already, but he claimed he was. Did a lot of lying in the courtroom, got found out, faked a lot of evidence, etc. It was judged that he was not Satoshi Nakamoto, and mainly that his trademarks and his right over the Satoshi Nakamoto name and the Bitcoin white paper, etc., was not valid. So this week, that was a few weeks ago, this week, the judge has announced in the UK that they are going to freeze all of Craig Wright's funds, and he's not able to spend any of them, which is a really great result because, quite frankly, the guy deserves it, and he has been using up a lot of oxygen in the world for nothing. The third thing that I wanted to talk about, what happened last week, as I said, so Bitcoin actually reached its highest ever monthly and quarterly close. This is a really great sign, especially in a bull market. If we look at the 4 previous times where this had happened during Bitcoin's lifespan, Bitcoin went on to do a 3x multiple of that all-time high during the forthcoming bull market. So if that was to happen, and I'm not saying necessarily that it will, Bitcoin could hit up to about $210,000 per Bitcoin in this cycle. So be pretty interesting to watch. My theory is kind of more based around the diminishing returns theory. And what that means is as Bitcoin becomes more and more of a mature asset, it takes a lot more funds to kind of move the needle and to increase the price. And what you tend to see is a reduced multiple in the returns of Bitcoin each cycle as it gets more mature. Still a huge amount of upside, don't get me wrong, but just if we compare it to previous cycles, kind of the later you get in, the less upside potential there is, but still a huge amount of upside. But the same things happens also on the downside as well during bear markets. So as the asset matures during the bear markets, you're likely to see a lot smaller drawdowns as each cycle progresses. Mainly because of the amount of capital it takes to move things. So the last chart that I just wanted to show you was really an historic precedent in Bitcoin and a real milestone. And that is after our close in March, what we've actually seen is the 7th consecutive green monthly candle in a row for Bitcoin. And this is the joint top green monthly candle in a row in Bitcoin's history. The last time that this actually happened was 2012, which also had 7 green monthly candles in a row. Can we make it 8 green candles and beat a Bitcoin record? Only time will tell, but we will see. So I want to thank everybody that is following my portfolio and all of your support. I'm always on hand to answer any questions that you have. I will also endeavor to give you as many video updates as I can to tell you about how our investments are doing. And if you haven't joined our Discord group, please do. We have a really great community of people, and we are always talking there on a day-to-day basis about what's happening in the markets, and anyone is able to ask me any questions that they want at any time. It's a real lovely community of people. So everyone have a great week ahead, and I look forward to speaking to you soon.